Hello everyone, good afternoon. Can you all hear me? Please, can someone confirm that I'm being heard? Okay, am I not audible? Okay, thank you, Joseph. All right, thank you, good afternoon. Welcome to week 2 of our JIIPCC Mentorship and Internship program under the Fintech course. We're in the third and fourth quarter of 2024. You're all welcome to class today. I would like to kindly ask and employ all mentees that are currently on this call to kindly reach out to those who are on the group who are supposed to be here but are not yet here. Please, to your co-mentees, kindly reach out to them that class has officially started and we'll be going straight into the business of today. So my name is Dennis Williams and I will be moderating today's session. Our topic for today is commercial development of fintech. Like I said, commercial development on fintech, and we already have one of our mentors on call already. She'll be helping us run through the topic for today alongside other mentors while we wait and expect them to join in. But not to waste any further time, let's go straight to introduce the mentors for this particular class. So the first mentor we're expecting today is Mr. George Onyewuchi. Mr. George currently heads fintech engagements for First Bank and its subsidiaries across Africa at its Digital Innovation Lab, setting up and driving the bank's fintech strategy. George is a link that connects technology, business, and ecosystem partnership. He is at the intersection of product partnership and ecosystem building. He has led the tech solution product development for the SME banking business of a leading commercial bank, and has taken numerous financial and non-financial products from idea to markets and growth. He has led digital transformation in the client engagement processes for leading commercial banks, including one of Nigeria's banking industry first end-to-end account opening for corporate accounts and SME digital lending. His team has won numerous awards for powering growth of SMEs. He provides advisory for Crypt.Africa towards developing blockchain infrastructure and building the operating system for African business on the blockchain, and hosts knowledge sessions on blockchain application to various industry within the African context. Mr. George is a well-known mentor amongst us, amongst the fintech space under JIIPCC. I'm sure he'll be joining us shortly if once he's opportune or chance to. Our second mentor for today that we expect in this session is Mr. Christian Ngombo. Mr. Christian is an experienced management consultant. He's an experienced management consultant at EY, that is Ernst and Young, in London, as part of the fintech team, working with scale-ups and large firms across reg tech, payments, and crypto assets. He has prior experience as an open banking consultant for a fast-growing SaaS fintech in London, working with EMIs and tier one banks, delivering their digital transformation projects. Christian has recently contributed to UK's regulated liability network discovering phase, exploring multi-asset atomic settlements through a shared ledger for financial markets participants. Christian has extensive experience in business intelligence with technology, working with cloud agnostics, global firms to deliver growth strategies and operational models with collective deal sizes exceeding 7 figures. Christian holds a Master's of Science degree from University College London with a special focus on economic policy and effects on key value chain. Thank you, Mr. Christian. Mr. Christian is not yet here, but I'm sure he'll be joining us shortly. The third mentor we are expecting in today's class is Miss Kamalika Porter. Spent over a decade building some 0 to 1 fintech journeys like the Unified Payments Interface or UPIs, open finance and neo-banking platforms in India, prolific blogger, and runs a weekly fintech newsletter called the Fintech Chronicler, which led her to the title on LinkedIn Top Voice twice and top 12 global AI and financial influencers by Data Reels, recognized by the Reserve Bank of India for her contribution to open finance in India. She was recently recognized as upcoming fintech leader at the Barrett Fintech Summit. Miss Kamalika, like I said, is not yet here with us, but okay, she is.
I just joined in. Hi, how are you?
All right, so we're very fine, ma. Thank you so much for joining in. You're
Thank you
welcome.
so much for inviting me, and thank you everyone for joining in as well.
All right, so the last mentor we're expecting for today's session is Miss Damilola Akina Yajo. Sorry, ma, if I didn't pronounce your surname very well. Please, you can kindly help me with the correct pronunciation. Damilola is a financial service professional and currently leads corporate partnership and growth at Bankly, where she enables infrastructure and banking as a service for digital payments, savings, and credits. She is skilled in problem solving, strategy, business intelligence, and collaboration. She is very passionate about financial inclusion and has led and managed many projects for digital finance, financial services, and products to promote financial inclusion in Nigeria. She has led growth. She has led growth of SMEs and fintech by using cutting-edge technology solution and products. This spurred the birth of her own startup, Spiced by Asabi. Prior to her transition to the fintech industry, she worked in top-tier commercial bank in Nigeria, that's Sterling and Providers Bank, in various capacity ranging from customer experience, product manager, and strategy, as agency banking, banking as a service, and business development. She has a strong synergy with the payments ecosystem collaborators and a host of other payment enablers. She loves to watch action movies, visit restaurants, and food blogging. Thank you so much, Ms. Damilola, for joining in. We are happy to have you in class. Not to waste any further time, we have two of our mentors here in this session, and they will be helping us give us a run through of the topic, commercial development of fintech, for 15 minutes each, and then we would be taking presentations. So please, we'll be giving the floor to Ms. Damilola first for our presentation, then we'll take Kamalika's presentation. So, Ms. Damilola, the floor is yours.
Hi, good afternoon, everyone. So my surname is pronounced Akinayajo. I suppose your team has the presentation. I'm not able to join the training from my computer now. So if you have it, you can put it up. I shared it some days back. So I think I'll just try to stay on the side of time management so that I don't exceed my 15 minutes. So good afternoon, everyone, once again. I'm happy to be here with you today. I want to talk about the topic today, which is, commercial development of fintech in Nigeria. I mean, if we have all the mentees in the house today, at the moment, please confirm that, we're not waiting for any other person.
We still have a few who haven't joined in yet, but I'm sure they would be joining in shortly. But it's fine. It's fine. You can go ahead and start. I'm still trying to access your I'm still trying to assess your presentation.
Okay, when you have it, go ahead. Or better still, I'll just speak while you're doing that. So, commercial developments in Nigeria, commercial development of fintechs in Nigeria, of course, will date back to, I think 2 decades ago when the likes of Internship and some other giants at the time, I think Unified Payments as well, started to find how to simplify payments in Nigeria and how it will be easy for somebody to transfer money to another person, or for a business to transfer money to another business without having to move heavy cash around in the market, and without having to use a checkbook. I think when the advent of cash deposit was gradually phasing out, a lot of businesses resorted to using checkbooks for payments, because it will go to clearing and all of that. What happens is that the payment doesn't come in instantly with checkbooks. Then I think it used to take about 2 to 3 working days, right? And it just takes forever. So introducing financial services into the market today, the traditional institutions had to, at the beginning then collaborate with the fintechs that were in the market then, and what it gave birth to the emergence of digital assets to like cryptocurrency that we have today. Even though Nigeria today, cryptocurrency is not a legal tender, but you still find it happening. Being used in the informal market today. I hope maybe someday we'll have, some regulation in Nigeria that supports the use of digital currencies. And of course, after a few decades of growth, it gave birth to a lot of fintechs in Nigeria and even in Africa today, and all over the world, of course, as well. One of the leading fintechs today that even when they wake you up from the sleep, that you mentioned is Flutter with Paystack, Interswitch. We have Paga as well. We have Kuda, we have Money Point, we have Pampay, and a host of others. And what has typically happened, with their emergence and capacity to, provide the services either for peer-to-peer payment or for business-to-business payment, or for P2B, the peer-to-business payment as well, or generally just providing digital banking services where consumers need not visit a physical structure of a bank to open an account. Today we have, digital banks like Kuda and even Money Point, who is now a major player. Who is now a player in the consumer banking sector. We also have Kuda as well, and quite a number of others, and OPay. So they have all come together and leverage on a system we call the open banking system, where the bank is extending services to third-party providers, that they are fintechs themselves, or they are an aggregator of the service, or they are a large corporate organization that need data of consumers, either to process payments or to generate invoices and all of that. So that's what has typically happened with open banking. And of course, open banking also recognizes the ownership of the ownership of the data. At the center of all of this, the customer's data is what is being shared here. And 2 years ago, if I'm right, CBN released a framework. I think it was first the guideline, then I think I don't know which came first, but we released a framework and a guideline for open banking in Nigeria, and they highlighted quite a number of things that is very critical to the success of open banking in Nigeria in that framework. And of course, they identified the participants in the open banking system, and they identified who the API consumer is, the data owner itself, which is you, myself, and every other person that has a data repository somewhere. Excuse me. And of course, they also identified the open banking registry that is going to be like the custodian of all of every person that is participating in that ecosystem. And of course, they identified the responsibilities of all of the parties in that framework. So today, that connection between fintechs and the banks and the lenders, the payment processors, the card schemes, even CBN itself, all of these things are possible today via the open banking ecosystem that has, come to stay in Nigeria and of course all over the world as well. There are a number of startups in Nigeria today that provide open banking. We have one pipe in Nigeria here, Flutterwave as well. Paystack also does that. Paystack has, predominantly a payment gateway service that allows you to, receive payments with a debit card or with bank transfer if you're in Nigeria. Then we have LendQR. LendQR, they provide credit infrastructure as a service. So if you're a lender today and you don't want to invest in your infrastructure, you just want to focus on, your building your business development. If you go to LendQR today, they'll provide you with that credit infrastructure as a service. Then we have the likes of Zone as well. They were formerly called AppZone and they are known as Zone now. If you've been following the tech news, you see that they just got into a partnership with NIBS where they would want to use the blockchain technology for payment processing. And this would technically just improve the uptime and reliability of the instant transfers. Then we have the likes of Stitch. I think Stitch is domiciled in South Africa, if I'm right. And Unlimited is in America. I think they also have a business operation in Africa as well. These people, like I said earlier, they typically provide person-to-person payment, person-to-business, credit service, buy now, pay later, payment gateways, digital banking, etc. Then, of course, this now brings us to the embedded finance conversation. So today, you find some fintechs who do not have, you find some, applications rather, who are not fintechs, but they have approached a fintech or a commercial bank or another entity who aggregates banking services to say that on my application, I want to have banking services enabled. I want my customers not to go outside of my environment to process payment for me or to just provide some value-added service. So, essentially, embedded finance is the integration of, banking capabilities into your application. Today we have the likes of Jumia, who at the time was providing courier services, logistics for delivery. They had the Jumia food. And I think at the time they had the Jumia hair, where you could book flight tickets rather. And of course, the main part of what we all know Jumia for, which is the e-commerce, where you can buy fast-moving consumer goods, in fashion, retail, electronics, mobile devices, and the likes. Just house supplies, literally. And of course, we have, even in Nigeria here as well, we have the likes of Wakana, who today provide travel now, pay later, which also falls under the buy now, pay later service. On the Wakana as well, you can save to travel. So you have the opportunity to have a dedicated account number that is assigned to you, and you start saving up for a travel. If you have plans to travel for Christmas, and let's say we're in January now, you can start saving towards that trip and not having to dip your hands into your pocket and take out the entire sum at that time. And, it feels really inconvenient. So they have all of these capabilities. And of course, we have the popular Google Pay and the Apple Pay. That is, Apple Pay is mostly used in America, where today people who have Apple devices can load onto their Apple wallet and, they can pay for goods and services at the locations that Apple Pay is allowed. What these guys typically do is just enter a strategic partnership with a provider of banking services. So it could be the commercial bank itself, if that is possible by licensing. It could also be a partnership with a fintech that has aggregated banking services and is able to connect customers' to exchange customer data in a secure platform through a secure channel as well, and is able to process payment. Today, of course, for some of us, we know Uber. On your Uber app, you can pre-fund in some countries, which is acceptable. You can pre-fund your Uber wallet, and you can pay for your trips within your Uber wallet. And of course, I mean, there are other value-added services that Uber also provides outside of the ride hailing. I know in London today, sometimes I hear Uber drivers say that they are able to provide some like a soft credit facility to the drivers, to just give them an opportunity to maybe earn their income in advance, and they're able to use these earnings to pay for their bills or any lifestyle payment that they want to do. And of course, I mean, Shopify, we all know Shopify. Shopify has moved gradually into a full-fledged embedded finance platform where you can do shopping, you can access buy now, pay later, and of course Amazon as well. I'm sure, I mean, quite a number of us have Amazon accounts, and we have a lot of things on our cart here to check out. So I think that's it essentially for commercial development in Nigeria. It has gone, I mean, banking generally and access to financial services in Nigeria has gone beyond just taking cash to the bank to deposit and getting a credit alert as you step out or just while you're in the premises. It has gone beyond providing value to the consumer. And in this day and age where people are upwardly mobile and they're in this city today and then in another city tomorrow. So these fintechs have identified challenges that are around this heavy migration and this cross culture that we have now, and they're always finding opportunities to provide services to close the gap that are available. In Nigeria today, we have diverse of fintechs who have come into the market to provide solutions for housing, for mobility, for health, for education, for commerce, for even as far as export. We have fintechs today who literally help you to, process your product and get you ready for export. And we have some fintechs who provide advisory services. It could be advisory for education. You want to school abroad and, you're looking for how to get started. You don't even know how to select your schools. You don't know which countries have scholarships. You don't know which country is good to live in, literally. So these are some of the advantages that fintechs has come to give us in Nigeria. I mean, but however, it also has its own downsides, which is that there's the exposure of customer data here and there. I remember at the time, I think the prevalence of that has reduced though. There was a time in Nigeria where even services that you did not subscribe for, you begin to get newsletters, you begin to get text messages, you get pop-up notifications on your phone for things that you did not subscribe for. So as much as possible now, today, the Nigerian government signed the Data Protection Act. I think it was last year or 2 years ago. And today now, every bank or every fintech is, every bank is expected to mandate their clients, their vendors, and of course, fintechs by extension, to get the NDPR certification so that you're going to commit to protecting the customer data that you have in your custody and ensuring that whatever details that you have and you want to exchange with another party, the customer either gives the consent or, just give you like a one-time consent or give you a consent in perpetuity for a period of time to say that between 1st of January and 31st of December, this is the access that I give you to, to do with my data. And you will, of course, protect the data and not use it to, to promote anything that would fund, cyber terrorism, anti-money laundering and all the likes. I think I'll close with this by saying that every fintech today or every provider today and every participant in the open banking ecosystem is expected to protect the customer's data and give them as much as possible confidence that their platform is safe for transactions, their funds are safe with you, and of course their privacy is intact. Thank you very much.
Thank you very much, Ms. Damilola, for that wonderful introduction into the topic. I think in the last 15 minutes thereabout, you were able to highlight very key points. You were able to talk about open banking and then embedded finance, and you were able to highlight it within the Nigerian context. So thank you so much, Ma, for that. We really, really do appreciate. So we'll be moving over to our next mentor. Some of our other mentors are still yet to join. We've reached out to them, and some of them are having some technical issues, so they may be late or may not be able to join in for this session. But we'll be moving over to Miss Kamalika Poda. I'm sure she has, we've listened to a Nigerian context of the topic, right? So Miss Kamalika will be giving us a more global, more diverse context. So thank you so much, Mark, for joining. You have 15 to 20 minutes, Mark, for your presentation. So thank you.
Thank you so much. And Damilola, thank you so much for setting the context of what is the Nigerian fintech doing. While I've been following it from the outside, getting an insider perspective is just that it just adds that much more depth to the entire conversation. So thank you so much, Damilola, for that. Unfortunately, I could not get my presentation prepared on time because I just got finished with the Global FinTech Fest, but I do have my notes over here. And the way that I thought we'll go about it is because Damilola set like the beautiful context of what it is that fintechs are doing in Nigeria. I thought I'll focus more on open banking and open finance. Start off with like a brief introduction and an overview of what it is that open finance is, how is it different from open banking, what are some of the key factors that have led to the growth that caused open finance to one come into the ecosystem, and what has led to the growth of open finance. Especially, we'll focus a little on the consumer side of it, where I've worked in India on building some of these open finance applications, especially on the personalized banking or the personalized financial management side of things. We'll also cover some of the regulatory frameworks that are there across the globe, broadly putting them into three buckets. One is the open finance implementation, which is very regulatory driven. The other one, which is market driven, and the third model, which is like a hybrid of the two. And we'll focus on regions like EU, UK, US, and India, because yes, I've worked on the open banking initiative in India. And we also try seeing, we'll talk a little bit about the API and the data sharing and the security side of things, because I believe the presentation that all of you are presenting is also on that topic. So if that sounds good, let's get started. Is that okay, guys? Does that work?
Yes, Ma, it does. Yes, Ma, it does. Thank you.
Okay, thank you so much. So first, starting off with a definition for what is it that open finance is. Okay, let's start with open banking. Open banking primarily is about taking banking services outside of the bank. So it primarily focuses on enabling third parties to access banking data through custom-built APIs, which in turn allows customers to connect their bank accounts with various different financial service provider applications. Now, open finance broadens the scope by including non-banking financial data as well, like, for example, data from investments, data from insurance, pension, in a lot of places, health as well. So this expansion, it provides or it allows for a more comprehensive and complete view of the consumer's financial footprint, and it helps in the facilitation of various different financial services into non-financial sectors, especially like into healthcare and into government initiatives and all of that. Now, most of these open finance business models, the way that they operate is they either act as a layer on top of banking. So that is like, banking as a service plus. So while you have like the base bank services fulfilled by your bank, you probably have a fintech wrapper application that sits on top of the bank, which also plugs in the various different other elements of financial management for you. The other way is you have one app that integrates with all of the different entities that are there. So be it a bank, then they integrate with an insurance provider, a wealth manager, and all of those into their platform-based model. So that's the second application. And the third application, which is what I think a lot of us have been unknowingly exposed to, is that of embedded finance. where you have non-financial applications. Like, for example, Damilola mentioned Apple Pay and Amazon over there. Now, Apple and Amazon are typically known, Apple is known for their beautiful custom devices, and Amazon is known for online shopping. But how many of you have probably, I'm assuming a lot of you have been exposed to, whenever you're buying a high-end value item from Apple or on Amazon, you may have been exposed to a add-on insurance for those products. That's embedded finance, where a non-financial company integrates these financial services into their core offering in a way that you can't even realize that you're actually interacting with a financial interface at the end. So those are like the three broad business models of open finance. Now, moving on to, and by the way, all of this is mostly through secure APIs. So we will also get into how these APIs are secure and all of that, because it's very central to what the topic that you guys are presenting on as well. Now, most of these APIs, because they're directly sitting on top of the bank's core banking system, or if it's a wealth management system, their core data stack, these APIs have to be secured. And by secured, I mean it's end-to-end encrypted, so that if the data packet, when it's being transmitted from party A to party B, even if it's intercepted, without the private key of the two intended parties. Now, let's say that, party A is sending data to party B. So then the data would have been encrypted using the public key of party B. So only with the private key of party B can this data be decrypted again at the intended recipient's end. So even if you do manage to get access to that particular data packet, it won't make sense to you, because it will just be a garbled set of nonsense, which until and unless you can unscramble with the private key, you can't get access to it. So that's one way of securing the data in transmit. Traditionally, a lot of banks, especially, what they do is they have a bespoke arrangement. So every bank then wets and onboards every other fintech or third party onto their application, onto their stack. And when they onboard these third parties onto their stack, they set up a very bespoke sort of an encryption model. So the encryption model and the key that's used to encrypt the data, that varies between bank and the party as well. Now, this model actually has its challenges, because every partnership that you set up, you will need to set another set of encryption model and an encryption key over there. So this is why, a lot of, especially in India, typical bank integrations take 6 months to sometime even 1 year. But yes, coming to the origins of open banking, I think, interestingly, a lot of us believe that the origin was with the PSD initiative in the European Union. PSD, by the way, stands for the Payment Service Directive, which was set up in 2007. But even before that, the concept of increasing the competition to banks by opening up or disintermediating the banking services, that concept itself can be traced back to 1980s roughly in Germany, when the Federal Post Office of Germany conducted an experiment of creating online banking services for their consumers, which connect with the various different computer systems that the banks were using. So it's not just one particular bank's interface, but they connected with various different regional banks to create one homogeneous I think it was known as home banking computer interface back in the 80s, 90s. So that kind of laid the groundwork for establishing the protocols that are being used in open banking. But yes, the real push for it came when the European Union was trying to bring in SEPA, or the Single Euro Payment Region. And with that came PSD1, because they had to consolidate all the different regions within Europe and the extended EEA to ensure that everyone is following one seamless set of regulations when it comes to accepting payments. Now, the aim for this was twofold. One, of course, it's going to standardize everything that's happening when it comes to accepting euro. The second was also this level of transparency that this brings in would also enhance competition. So there were two reasons why this was done. Following this was when PSD, so this was in 2007, 2000, all the way to 2009. In 2014, PSD2 directives came in. And with PSD2 directives, banks, which were till then the only players which could, connect two different entities if they wanted to make a payment, banks were then mandated to open up these payment rails of theirs to allowing third parties also to integrate into their payment systems. So that's when, payment service providers started cropping up to take advantage of this PSD, which also meant that in a way, the networks that were there, they were also being disintermediated in a way. Now you could directly plug with the bank and ensure that your bank-to-bank payments can happen without the need for a Visa or a MasterCard. So that it was also a big threat to their business model, which is why you'll see MasterCard and Visa also set up a lot. They did a lot of focus on the entire PSD2 initiative to make sure that they still stay obsolete. They don't become obsolete. They still stay relevant in that place. Now coming to now that we've covered that, let's come to some of the actually no. Let's also kind of cover some of the key features, because PSD3 now, while we're talking about the implementation of PSD2, and that's still going on. While this was done in 2014, 2015, implementation for PSD is still going on. It's going to be almost a decade, and we're still having third-party apps setting up their accounts with each of these, setting up their data rails with each of these banks. We've also come up with PSD3. Now, PSD3 introduces a lot of authentication and security measures to combat fraud, which I think is very critical to what's happening today, where we are seeing a lot of these AI-driven models that are coming in that can easily hack into even very secure algorithms meant to protect the data pipeline. And while PSD3 was proposed in 2023, I think the anticipation is that it should be implemented within 2026. Also, by the way, another interesting thing is that the regulatory scope for the entire payment council has been expanded to cover emerging technologies like blockchain and digital currencies as well. And obviously, because a lot of countries are now talking about CBDCs and stablecoins, I think this is a very good move to have, where you're also ensuring that there is transparency with regards to things like fees and taxations and the merchant discount rates and all of those. So this will definitely strengthen consumer rights as well. One more thing that I think that will happen with PSD3 by the end of 2026 is that it will definitely balance out the competition between payment service providers and banks, as well as these emerging technologies like blockchain platforms, which are also enabling real-time, cross-border, person-to-person payments as well. So that's about PSD3. I think some of the things that I would want to touch upon when it comes to the ways in which open finance can be implemented. The first one is the regulatory-driven approach. Now, regulatory-driven approach is exactly what we are seeing with PSD 1, 2, and 3 in the European Union, where the regulators lay down the rules of what needs to be implemented. They mention how or what all data points need to be implemented, what all services need to be opened up at the financial institution, and what kinds of APIs that the non-financial institutions can consume. Which means that one of the arguments that has been there for a regulatory-driven open banking ecosystem is that because everything is so tightly boxed, there isn't much scope for innovation. All of that scope has already been written down in black and white. So it makes it harder for fintech players to come up with new innovative solutions. Sorry. Apologies about that. But yes, the other end of the spectrum is the one which is extremely market driven. And this is an implementation which you will see in the US, where there isn't any regulation around open finance, open banking whatsoever. It is what the markets want, which means it's very innovation first. But because there aren't regulators really trying to figure out what's happening here, the challenge in that case is that every open finance, open bank player needs to then set up 1:1 relationship with each of the banks in order to open up their ecosystem, their data, and their services for third parties. Of course, that means scaling open banking and open finance in US is very limited, especially because in the US there are close to 3,000 banks in the US. It's a very disintermediated market over there. There's no clear one winner when it comes to banking in the US. So if you want to serve a wide variety of consumers, you will have to necessarily integrate with each of these banks. And each bank has a different tech stack. The data that they provide is not in a standardized form. So building up those insights and providing value to the end consumers then becomes that much more harder for the fintechs that are trying to innovate in that space. So we've covered the regulatory approach, we've covered the market-driven approach. Now let's come to the hybrid approach. And the hybrid approach is what India has kind of pioneered, which is also, so India's way of hybrid is known as the digital public infrastructure play, which combines basically both the elements of regulation and market-driven models. And I will just focus on the Indian model over here because that's what I've worked most closely with. So what the Indian model does is they set up the infrastructure or the rails on top of which companies can build their innovative use cases. So the use cases are not constrained, but what happens is that the implementation in this case becomes much easier. Now, for example, in India, the account aggregator, the digital public infrastructure for open finance, is known as account aggregator. Now, what the account aggregator framework does is, one, it says for each financial institution that's there, what all data types can be accessed by third-party apps, by authorized third-party apps. Two, for each of these data types, it also gives you a data skeleton or a data schema of the sub-elements and the kinds of insights and the kind of data that you can get, which means that the data you are getting is in a standardized format. It's easy to consume for you. So if you are a fintech player, you don't have to think of, integrating with 10 different banks or, insurance providers and mutual fund houses and all of that. You can just set up one API structure and integrate with the account aggregator framework because it's going to ensure that everyone follows the same API structure and the data you get is standardized. So you spend more time in personalizing the insights that you get for your consumers so that you can serve them better. Now, when it comes to the innovation that's there with it, of course, that is extremely market driven because maybe there is one fintech that is catering to, for example, high net worth individuals who probably are not that interested in what is the best discounts that they can get with their cards. They're probably more interested in figuring out, okay, I have a corpus of XXX amount. How do I make sure that I'm able to retain my wealth and grow it? Versus someone who's from a lower to a middle income background where they would be more interested in optimizing the day-to-day spends that you have. So how do you tell them that, you seem to be someone who's eating out the most. So here is a payment app or a payment service offer, which will help you to get lots of cashbacks and discounts every time you order in or eat out. So that helps you to kind of figure out the use case you want to do and serve as a fintech, your consumers in a better way. Now the pros, that's on the pros. The complexity though is because it is sort of an open architecture over here, it also means that if you're not using very good quality security and encryption mechanisms, this data can be easily breached. So that is something that, a lot of fintechs and banks and traditional institutions are paying a lot of attention to, which means that, for example, in India, the key value pair that's used to encrypt data, that cannot be for a duration that's longer than that, cannot be used for a duration that's longer than 24 hours. So almost every 12 hours, these keys keep getting refreshed, and you need to have the algorithm synced at both ends of the parties to ensure that you're encrypting with the right set of keys and you're decrypting with the right set of keys. Otherwise, one, the data could be compromised, or two, you may get encrypted data that you're never able to reuse again, right? Because you've lost the keys or something like that. So yes, that's probably one complexity in terms of implementation over there. The second complexity that's and this is not for all forms of hybrid implementations world over, this is just something that's very India specific, is on the revenue potential. Now, because the open finance is on the digital public infrastructure, there is an issue here because the government has not allowed for monetizing of the data that these banks and traditional financial institutions have, which means that banks, while they have to maintain the data pipeline and ensure that they're sending correct data and up-to-date data via these open finance pipelines, they're not being incentivized to actually maintain this infrastructure. So now this becomes like a cost center for them, and becomes a very heavy cost center as the load on it starts increasing, because you're also responsible for ensuring that it's up all the time. Otherwise, the government does come back and fine you. So that's one very big con in India, where we're trying to figure out ways to potentially create revenue streams out of these data as well. So that's about, the three different models of open finance that's there. Now coming to the data and the privacy issues over here. Now, I think one of the very central things to building open finance is to ensure that you have some form of a data protection act present in your country. I was very happy to hear when Damilola was mentioning that the DPA Act in Nigeria has already been tabled and will probably be implemented by the end of the year. So that's one very good step, because misuse of this data can be very high. And if you're not penalizing parties for ensuring that you are putting in the right kinds of guardrails to let people know why this data is being pulled, first of all, what data is being pulled, who are you granting access to of this data? How can you revoke the access in case you no longer require those services? There should be a very easy way to do that as well. And how do you see if this data is actually being used for its end purpose or not? If these are not there, because data is such a gold mine, especially in today's AI age, it becomes very hard to ensure that you don't become the product at the end of the day. People are not selling your data for nefarious purposes. So that is definitely one. The second one is if you do not have a DPA Act and you're not penalizing parties, then they have no incentive really to set up robust encryption, hashing, and data localization norms, because you're dealing with very sensitive financial data over here. And until and unless these fintech platforms actually appreciate that, it's going to be hard to ensure that, even if the services you're getting is really great, it's going to be hard to ensure that your sensitive data stays safe, right? Also, if there is sensitive data, how do you ensure that this encryption of it sits well with, say, data redundancies and stuff like that, to ensure that service is not disrupted? That's also potentially another issue that's there. So that's kind of what I had in mind. I hope I made it in time. If there are any questions, I'm happy to take that.
Thank you so much, Ma. A wonderful presentation from you. Questions, we'll be taking questions after later on in this section in the class, right? So now we still haven't had some of our other mentors joined in yet. So what we'll be going straight to is just the presentation from the mentees. So please, group one, if you're ready, please kindly go ahead with your presentation for 7 minutes, and then we'll take group two's presentation also for 7 minutes, and then we'll get feedbacks from our mentors on the basis of the presentation. But before we do that, I want to apologize for sending in the presentations late to the mentors. We had a little issues doing that. So we'll be taking presentation now from group 1 and group 2. So group 1 presenter, if you're on the call, kindly share your screen and start your presentation. Okay, it seems we don't have the person presenting for group 1 on call yet. So please, can we have group 2 presenter on call? If we have group 2 presenter on call, please go ahead and share your slides and start your presentation.
All right, sir. I'll share my screen now.
All right, please, we are waiting for you. If you are not able to do that, just go ahead and start the presentation while I find a way to help you share your slides. Okay. Okay, Vanessa, are you with us? You can go ahead and start your presentation. We can see your screen.
Good afternoon. Can everyone hear me?
Hi, Vanessa. Yes, we can. Please go for it.
Okay. Good afternoon, everyone. My name is Vanessa Saliu, and I'll be handling the presentation for Group 2. So our topic is on the commercial development of fintech. And this presentation just has to do with certain innovations that have been fostered in using fintech, in using technology to enhance financial services. And it can be seen in two aspects. So the first aspect is the world of payments. And the world of payments has to do with how fintech has changed the way businesses and consumers conduct transactions. So people are even able to make these transactions anywhere with their mobile devices. So in the world of payments, we have digital wallets and mobile payments. A digital wallet is basically a financial application that can run on any device, like a laptop or a smartphone. So they can even be included on our bank apps. And the whole essence of digital wallets is that a person doesn't require a debit card, or even cash to make a purchase. They can just use their mobile device. It already has payment information, it can store funds, and it can just easily make these transactions. Then mobile payments also use these services, but they are just restricted to a smartphone or a tablet. So while a digital wallet can be on a laptop or a phone, a mobile payment is basically just used with a mobile phone. So I'll be moving to okay. So mobile payments have also enhanced consumer and market opportunities. It makes people independent of the traditional banking system, like going to banks. You can just use your phones or your devices to embark on these services, and they promote innovation and market expansion. Okay, cross-border payment solutions. So a cross-border payment solution, a cross-border payment is any transaction that can take place between two different countries. So a person can be in two different locations, like let's say Nigeria and the US, and they can make financial transactions with this medium. So it is very convenient. It's because it can be personalized. Like you can have a consumer-centric way of just making payments in a different country. And there are key players that have different roles in cross-border payments solutions. For example, banks and financial institutions. So banks could act as intermediaries between the payers and the payees. They could also help in converting this currency between the different countries. Then we have payment service providers. Payment service providers, they handle the technical parts, like processing these payments and so on. Then fintech companies basically make these applications that streamline the processes and a lot of other processes that they handle. Then there are also challenges in this cross-border payments, like cost complexity. There could be high transaction costs, and it could get really complex because it involves transactions between different countries. The exchange rates may be different. It may also process slowly, as the process may be a bit slow compared to traditional banking system, like just going to a bank or doing it in your own country or something. Then there could be regulatory requirements, like it could lead to complications. It may be more complicated than normal traditional banking because there are different rules, there are different laws between these different countries, and they would require a lot of things that have to be considered. So it makes it complex. Then transparency. There may be a lack of transparency in terms of the fees. Okay, so we go to fintech solutions for seamless transactions. Okay, so these are just solutions to make the transactions a lot better by consolidating payment providers, leveraging multi-currency accounts, optimizing currency conversion. These are just ways that you can make that these transactions can be made more seamless and can be streamlined more. Then also partnering with financial institutions and leveraging blockchain technology and so on. Then we move on to cryptocurrency and blockchain. Cryptocurrency and blockchain payments actually work hand in hand. So cryptocurrency is basically a digital currency that is secured by something called cryptography. And this makes it difficult to be counterfeited. So it is decentralized, meaning that it is not controlled by the government, and it uses blockchain technology to distribute it across a whole network of computers. Then blockchain is just a database which maintains a list of records called blocks. So these blocks contain data on approved transaction, and they are linked with cryptography, as I mentioned earlier. And it's just basically a digital ledger that records these transactions across computer networks. So there are examples of this. We have Bitcoin, we have Ethereum, Litecoin, Bitcoin Cash, and Ripple. All right, so there are also okay, sorry. Yes, it offers decentralized transactions. Transactions are more secure. Low transactions increase accessibility. Um, these methods are actually easier in a way compared to traditional banking methods. They can make things easier and quicker. Then there are also challenges like regulatory uncertainty. Okay, I think that has to do with the fact that it is decentralized. So there aren't like it, for instance, in Nigeria, as one of our mentors mentioned, cryptocurrency isn't really regulated in Nigeria. So that could lead to complications. Then volatility of cryptocurrency prices, scalability issues, which has to do with it's not being easy to process a large volume of data. Then there are also security risks. Um, then crypto also has blockchain. Blockchain has a lot of benefits, like it can be used for cross-border payments, as I mentioned earlier, e-commerce, remittances, micropayments, and so on. It's also really efficient. It can also be secure, even though there are few security risks, but it's also secure and enhanced customer experience and so on. All right, so we move to contactless payments technologies. So this is just a secure method of making payments by using your debit card, credit card, or smart cards by using RFID technology. RFID stands for radio frequency identification. So how this works is that a system allows a person to place their card on that contactless payment symbol on the terminal, and then this information is transmitted from the chips on the card to the bank, like when you're using your POS. Then this system, it accepts it, and then it signals that the transaction has been approved, that it has been received. So that's how it works. Then fintech and financial inclusion is the other aspect of this presentation. Financial inclusion has to do with being able to access financial services. It ensures that consumers, like individuals and business, they're able to access these services and to make it affordable too. So access to financial services in emerging markets. Yes, so there are various emerging markets with significant progress. I don't know if, okay, like in Kenya, India, Bangladesh, South Africa. South Africa has emerging markets in digital payments and financial inclusion. Then Indonesia also has digital payment and microfinance. Those are emerging markets in those countries. There are also challenges. There are also challenges faced here, like limited financial institutions in these countries. There could be also low financial literacy. A lot of people may not be aware of these things. They may not be quite literate. And there could be high costs. It may be limited. There may be limited access to credit. And there are also opportunities that financial inclusion presents, like digital banking, mobile banking, microfinance, loans, financial inclusion initiatives, and so on. And there are also benefits. There are benefits as well. It increases economic activity, financial stability. It also gives credits to people and empowers marginalized groups, and so on and so forth. Okay. Then I've already mentioned the challenges. So the next aspect here is microfinance and fintech collaboration. So this collaboration actually fosters financial inclusion. It enhances it. It makes it more efficient, and it expands financial inclusion, like across a wide range of people. So there are ways in which this can happen. There are also benefits, like it's okay. I've already mentioned that it's more efficient. It improves the client experience and enhances financial inclusion. better risk management, it reduces risks, and also increases outreaches to a lot of people. Okay, so examples of these collaborations we can see between M-Pesa and Faulu Microfinance in Kenya, also between PayPal and Grameen America in the USA, and there are a lot of other successful collaborations. Then there are also opportunities that these collaborations present in fintech, like digital lending platforms. It lends digital platforms to a lot of people, and it becomes more credit worthy by providing credit scoring, provides digital wallets, remittance services, and it also provides financial literacy to people that may not be aware of these opportunities. There are also barriers. There are barriers, sorry, in challenges reaching the unbanked population. Okay, these are, okay, for example, lack of infrastructure. There may not be enough banks or ATMs. There may not be enough internet access. Then financial literacy. A lot of people may not be aware of these services and their benefits. May not be affordable. There could also be security issues. Then there could be problems with identification and verification. They could need government IDs, like let's say NIN. Then there are also geographical barriers, and so forth. There are strategies to address these challenges, like mobile banking and agent networks, providing digital wallets and payment solutions, financial education, and literacy initiatives, and also inclusive identification and verification systems. So these things will help to address these challenges in reaching the unbanked population. And there are social economic impacts of fintech-driven financial inclusion. There are positive impacts like financial inclusion. This promotes economic equality by integrating more people into using these services. It promotes equality. It improves user experience with a friendly interface, and it also creates new jobs. There's also an increased efficiency. There are more business models, and it also limits the use of traditional banking by providing these fintech services. It fosters economic growth and it reduces risks. There are challenges as well with regulations, data privacy. Data privacy and security is actually quite important because involving people's data in these things means that they could be more vulnerable to hacks, and they could be more vulnerable to attacks or just being leaked to the public. So data privacy is a major concern. Then dependence on technology. In conclusion, fintech transforms payments with these different methods, with these different innovations like digital wallets, mobile payments, contactless technologies, and so on. The commercial development of fintech, it has actually significantly enhanced payment systems. It promotes financial inclusion to people that are not able to use these services, and it is very capable, it has the potential to address these barriers that are faced by different groups of people. Okay, moving forward, there should be continued innovation. There should be more solutions to these problems. There should be increased financial inclusion to people that are not that don't have access to this. Then there should also be positive social and economic impact on individuals, businesses, and so on. So that's the end of the presentation. There were no questions from my group.
All right, thank you so much, Vanessa, for such a wonderful presentation from your end. Well done to you and to your group members for putting together that presentation. Unfortunately, Group 1 could not or cannot make their presentation. We will do well to address that in their subgroup, and hopefully we get to receive a presentation from them next week. So moving forward, right, we will just want to take feedbacks from our mentors on the presentation that was made by Group 2. So we'll start with Ms. Damilola. If you're still with us, Ma, please, Ma, do you have any feedback you would like to for the members of the group to know on the account of the presentation that they have made? If there are any knowledge gaps you would like to fill based off of the presentation.
Group 2, well done for your detailed presentation. Even though it was quite lengthy, but following through with it was quite refreshing. I like how you were detailed with the scenarios around the use cases and the data privacy part of it, which you try to explain to the best of your knowledge. So if you want to also get, this is just an addition. If you want to get further knowledge, you can go on the internet and check about open banking in Nigeria. So there's an open banking trustee in Nigeria that is led by the CEO of Lenskura. His name is Ayode Jolore. If you can read up on it as well. If you have the time, you can also read up on the guidelines for open banking that was released in 2022. This also help you understand better the area of data privacy. There's also a Data Protection Act, like I mentioned, that was signed into law, I think late last year, if I'm right. And this just gives us the better insight into why the CBN is saying that every business entity that collects or processes customers' data must be certified by the NDPR to ensure that your business is capable enough to even carry out these processes, by collecting customers' data or by processing it for another third party. So well done for that presentation. For the best of your knowledge, you've done pretty well. I liked the effort that you put into, the pictorials and even the slide presentation. Well done.
All right, thank you so much, Ma. We really appreciate that feedback from you. Thank you for sharing. We do appreciate. Please, we'll be going over to Ms. Kamalika. Please, Margie, what did you think about the presentation? Is there any feedback that you would like to give our mentees?
I completely agree with Damilola because Vanessa and team, we could actually see, how much of an effort you've put into understanding, one, the different innovations that are happening, not just in Nigeria, but across the globe, the different innovations that are happening in the technology, because you started off with talking about some of the things that a lot of fintechs today are paying across the globe, they're paying a lot of attention to. So I really liked that you started with that. But yes, one thing that I would want us, especially if we are all to become fintech builders, the one thing that I think we should also kind of focus on is in understanding is what we are building. Is that the right kind of product for my market? For example, and I'm just critiquing here because, it's about giving feedback in a constructive way that helps all of you to think better in the future, right? Like, for example, if say we are talking about cross-border payments. Now, world over, everybody wants cross-border payments to, one, they want it to be disintermediated. Two, they want it to be as real-time as possible. But let's say we do say that, yes, we want to build a cross-border solution. Let's start by going a little backward in understanding as to what really is the need for cross-border payments in my region. Like, for example, if I had to focus on Nigeria, how much of the country's GDP is actually coming in from, say, exports? How much of remittances actually goes out? How much of the currency actually goes out of the country? And is that a big chunk of the current population's pain points? If yes, what are the biggest problems that are there in that entire supply chain? Maybe you may find out through your research that it's not really about the payments being real time, but actually the export industry in Nigeria, for example, is facing a lot of delays in getting their payments because the invoices are not being processed on time by the foreign party that's there. In which case, it's not really a cross-border payments problem as much as it is a issue with generating invoices that are milestone based. And in that case, then you work backwards to figure out which is the right kind of technology that can help you solve for that problem. So that's where I kind of like the second half of the presentation a lot more than the first half that you did, Vanessa, because when you were talking about financial inclusion, I could see that these are actually the problems that the ecosystem also faces. And then you spoke about who's working on what part of these problems to solve all of it. So that's exactly the approach that I think I would urge all of you to take. Some of the resources when it comes to thinking of if it's open banking, if you want to understand the resources, then I think the PSD2 guidelines, which is there, they've done a fabulous job of documenting everything about open finance. I would also urge you all to understand what it is. What is an API? How do you encrypt API? How do you transfer data between two different parties in a seamless way? How do you ensure that there is that the latency between data transmission is as low as possible to ensure that the best kind of personalization can be provided to our end consumers? So there would be one other place that I would suggest all of you to look into. There are actually a lot of blogs, a lot of tech blogs that focus on this. One of my go-to happens to be Byte Go. They also have a YouTube channel that creates a lot of easy to understand technical content. It's BYTE Go, Byte Go. There are other channels also. Like I've subscribed to a newsletter known as TechFlix, TechFlix, TechFlix. And also, so in general, to stay abreast of what's happening in the industry, there are a lot of newsletters and YouTube channels that I think all of us should at least spend one hour a week going through all of them. But yes, lovely presentation, Vanessa, and thank you so much for taking us through that.
All right, thank you so much, Ms. Kamalika, for that wonderful feedback. I'm sure the members of Group 2 and other groups or the other group are listening to your feedback and taking note of that. So we'll be going to the question and answer segment of this session, and we'll quickly be taking questions from our mentees. So please, if there are questions, you have any questions you would like to ask our mentors, Ms. Damilola and Ms. Kamalika, you can go ahead and indicate. You can send your questions to the chat box, and we will do well to take your questions. So please, you can type your questions in the chat box. You can raise your hand, or you can just indicate. Use an emoji to indicate that you have a question. So while we're waiting for our mentees to ask questions, I think I personally have a question. And the question, I think I'll be directing it to Ms. Damilola. So Ms. Damilola, we've been having, in Nigeria, we've been having particular issues with cross-border payment systems. One payments platform like PayPal has been like heavily regulated. You can transfer money out of the country, but the regulations around receiving money can be quite a difficulty. Even though we are having new fintechs come out that are promising that they can cross-border payments, though both receiving and sending of cash of funds, right? It's possible but then the process is still heavily problematic in that sense. So Ma, what are some of the real issues on ground as pertaining what is going on in Nigeria as regards, those issues we face with making transaction across borders, and also those ones that are currently trying to include a better, smoother system in solving that problem? What are they doing right in regards to that? So Ms. Damilola, if you had my question, please, I would like you to help me answer that now.
Okay, so your question is what exactly? Who is doing what right?
Yes.
No, I'm asking what exactly your own question is.
Okay, my own question is, what are some of the problems we have with cross-border payments from Nigeria, payments abroad, receiving payments from other countries, and the companies that are making some headways in that thing? What are they doing right?
Okay, so in terms of why it is difficult, if you agree with me, there's a very thin line between cross-border payment and funding for other malicious activities. So one of the reasons why it's not just easy for somebody abroad to just send you money in Nigeria and just move on with life like nothing happened is because a lot of consumers have also abused the process, and the government is not able to delineate between which is right and which is wrong. So that's why the process is very stringent, and up until today, I'm sure that the number of IMTOs that we have, that's international money transfer organizations that we have licensed in Nigeria, I'm not sure they are up to 15, if I'm right. I mean, the major players are the Western Union, MoneyGram, eTransact. There are quite a number of others. We have World Remit, we have Sendwave, we have WIA, and quite a few others. So these fintechs have gone have approached the central bank, and they've gotten a license for the money transfer. And of course, there's the very recent was the Lemfi and Co. So most of the time, one of the issues is that the money is coming in very huge volumes, and the recipients, of course, are not able to state exactly what the funds are for. For the better part, once they're able to prove that this is what this funding is for, they will definitely allow you have access to your funding. Then in terms of what the others are doing, I think I pretty much answered that. They just literally walk up to CBN and say this is what they want to do. For others who provide these services and are not licensed, they will typically go into a business partnership with any of the licensed entities and sign agreements, MOUs, and they will be using the business. They will trade under the license name of a licensed entity, as opposed to using their own name that is yet to be approved by CBN. So that's it essentially, because the idea is to not allow the funding of terrorism, money laundering, just to combat financial terrorism. That's it, literally.
All right, thank you very much, Ma. That well answers the question. So please, do we still have any question from the sides of the mentees, just so that we can round up and close for today? Okay, do we have any questions? I don't think I can see any. Please ask questions if you can. Okay.
Good afternoon.
Okay, good afternoon. I'm trying. All right, please go ahead with your question.
Okay, my question relates to data breaches issues. In case of open banking, where there are interconnected financial services being offered by different platforms within the same structure, who, in case of liability, maybe there is data breach somewhere, who is to be held liable? That's my question.
A very interesting question. Was that Dagbo Abdul Rahman? Am I pronouncing your name correct?
Yes, you're right. That's my
Very interesting question. So I squarely think that if there has been a data breach at a fintech's end, then fintechs definitely have to be held responsible. If there's been a breach even during the transit of the data from, say, a bank to the fintech, even then fintechs have to be held responsible. Now, the biggest challenge with that is that fintechs are not regulated. So who's going to be holding them responsible, right? But so that's where I think from an implementation aspect, it makes a lot of sense to hold the banks accountable for ensuring that if there has been a data breach, then whom do you hold responsible for it? That also means when you start holding banks and regulated financial institutions responsible for the data security, it also means that they will not be willing to onboard any third-party application unless and until they also follow the best encryption and data security protocols. So I think that is why world over, if you see, when it comes to data protection and consumers' data privacy being managed, it's always the banks and the traditional financial institutions who end up getting penalized. Of course, when we hear of, let's say we hear of a news of a big fintech brand who's had some data breach at their end, is consumer trust lost? Yes, but they don't really have much of a monetary fine that's been put on top of them. Typically, the monetary fine or even regulatory embargoes happen on the bank's end. Like, just for example, giving you an Indian context, there used to be this very big fintech company known as Scapia Cards, which was trying to provide access to credit cards in India. And they were basically on top of a bank known as Federal Bank in India. Now, Scapia had a lot of data issues and basically a lot of issues with their privacy, data privacy and all of that. Now, the government cannot say, Scapia Cards, you should not be onboarding customers because who are you, right? You're not giving Scapia license to operate in India. So what the Reserve Bank of India instead did was to go and put an embargo on Federal Bank from onboarding any new credit card customers that were not already existing bank customers. So anyone who comes in from Scapia could not apply for a credit card anymore in that way. So I think from an implementation standpoint, because it's a lot easier to penalize and ensure, because banks are already regulated entities, already have to go through a lot of security audits and all of those. It's just easier that way. But the onus, in my opinion, should lie with the fintech companies as well, simply because we are increasingly moving towards a more decentralized world. So if the end entity who owns the consumer is not actually caring enough to have good security measures for the consumer's benefit, well, then they're not a good place for us to be giving our personal businesses. Was I able to answer your question, Dagbo?
Yes, you answered perfect.
Thank you so much. Amazing
All right.
question.
Thank you so much, Ms. Kamalika. Thank you, Dapo, for asking that question. I think it's safe to call it an end to this particular class. It has been a very, very interactive session in the sense that Ms. Damilola and Ms. Kamalika have put together their presentation and they've tried their possible best in the time frame that they were given to cover the commercial developments of fintech. So just before we go, I would like to request for those who are in places where they can turn on their videos. My lightning is not so good, right? It's looking like it wants to rain, so the lighting in my background is not so good. That's why I've not been able to turn on my video. So I'd like to ask for those who are able to, can you kindly turn on your video so that we can take a quick screenshot? All right. Thank you so much, Ms. Kamalika. Sorry, a moment. Thank you so much, Joseph. Thank you, Samuel. Thank you, Dapo. Right. Can we have more mentees turn on their video if that is possible? All right. We are done with that. We're done with that. Thank you so much, everyone. And I think with this, we've come to the end of today's session. Thank you so much to our mentors and to our mentees who made themselves available for this particular class. It has always been nice listening to our mentors give their broad perspective on their invaluable contributions to this particular space. We hope that moving forward, we'll be able to get to hear from them in future sessions and in future quarters. Thank you so much, and goodbye, everyone. Enjoy the rest of your day.
Thank you. Goodbye.